Hi, Don Singletary. If you're new to the channel, you came to the right place. If you've been considering learning about day trading futures, that's all we do here on this channel. But the good news is we also use the Micro Eminis, the new 1/10 size contracts, to make learning to day trade affordable. I'll show you what I mean because the live trade of the week is coming up next. Today's featured trade is going to be very fast and very profitable. I hope you enjoy it. I shorted two of the Russell 2000s on February 2nd, 2022. You can see the market opens at 9:30, heads down really fast and hard. You can see the MACD red arrows below showing that we're gaining negative momentum on the scale on the right, and also the red arrows showing the green line below the red line and descending rapidly. I use the standard bracket OCO order to enter three things: my trade price, my stop price, and my target price all at once. Now, you know, rule number one says the thing that's my number one priority is reducing risk. So I take my Tastyworks mouse and I move that stop down. It was 5 points or $50 away. I did not want to risk that much on this trade. I moved it down to 2029.70. So that's only 2 points away, which means I'm risking $20 maximum on the trade. This thing's going down quickly, so I reach up and grab my target price, which is at 2025, and move it down off scale below because I'm already trading at 2024.6. So this trade, surprisingly, but it's good news, is going my way and doing it very, very fast too. Now I'm taking my Tastyworks mouse out again, and I've moved my stop again to 2026.8. So I've got a free trade going on here, but things are happening really fast. This is already trading down at 2022, and I'm $50 ahead on the trade right now. And things do happen really fast. Before I even know what happens, I'm going to be out of this trade. Watch this. I moved my stop down because I'm trading down at 2021, 2020 down there. I'm taking my mouse, moving my stop down to 2021.20, and I get stopped out of the trade at 2021.3, actually. Well, that was some 2 minutes of fun, huh? I made $64 in a couple of minutes, and I can't even tell you quite how I did it. It happened so fast. I'm sorry the graphics weren't a little bit better, but I did go back and get this freeze frame. Candlesticks are 5 minutes wide, and this candlestick is at 10:15 to 10:20 in the morning, and this trade was over before the candlestick was. It only lasted about 2 minutes. I made $64. Now, what happened, as nearly as I can remember, is that I tried to move my stop down frantically and lock in some of a $60 unrealized gain, because those gains, and I tell you this from experience, and if you trade, you already know it too, that $60 can turn to $20 up. You can lose $40 of it in 10 seconds. It happens. It runs up and down fast all the time, and you can't always know when that's going to happen. So you try to err on the side of pocketing the money, and that was my instinct. After years of trading, I said, oh, I'm up $60 in 2 minutes. I'm not letting this fish get away. Well, you know about fish stories. They come home and tell lies about the one that got away. Well, this one just jumped in the boat, and I've got the money to prove it. Man's saying he just got lucky, okay? It happens. Our luck, their luck, her luck, his luck, no luck at all, and damn, how did that happen? All kinds of luck out there today. Here's something I've been wanting to do for a while. I want to take a frequently asked question. Someone sent me an email a few days ago, and this is very important for every trader, so I wanted to read it to you. Okay, the email goes something like this. Hi, Don, watching your channel, wondering how you feel about discussing the importance of stop losses in an upcoming video. Well, I feel great about it. It should be done, so here we go. He continues, I once had a Micro Emini trade open without a stop loss, and my internet went down during the trade. By the time I got the internet back up, I had to manually close the position at a loss of $120. That's pretty big even for a micro contract. Anything from internet loss to a power outage to a computer freezing or dying could blow up your account. Unfortunately, sometimes we're at the mercy of the machine with this type of trading. Yes, and I have that happen to me 4 or 5 times a year. It's not a lot, but when it happens, it can happen at a very inconvenient time, as this viewer wrote in, and it can cost you a lot of money. Well, there's a couple of ways you can put that stop loss in. One is the bracket order that I talk about frequently here on the channel, and you see it in a great number of my videos. It's a bracket order, also called a one cancels the other. And as you can see here, you enter the trade price, the stop loss price, and the target price all at the same time. Now, if you don't want to use a bracket order, that's okay. It's not something you have to do to put in a stop order. You can open a trade and immediately go to the trade screen and enter a stop loss order. Now, there are 2 kinds of stop loss orders. One is the stop limit order. Once your trigger price is hit, you have a limit order that goes to the market, and it won't fill unless you get that specific limit price. The other kind of stop loss order is a stop market order. This is the one I used most frequently, especially trading during the day session, because there's always plenty of volume and efficient pricing in the Micro E-minis. A stop market order has a trigger price that's hit, and then the very next trade available at your order is filled. I want to explain one of the fine points about the 2 types of stop loss orders. It's confusing terminology. Stop loss can be either a stop limit or a stop market. There are 2 specific kinds, as I said. The stop limit hits its trigger price, and then your order becomes a limit order. It will not fill unless you get that specific price. Now, if you're trading in the middle of the night, you may want to use the stop limit order, because sometimes, and this may be a new term to you, there's a bid-ask gap. There's a difference between the bid and the ask price that's more than 1 tick. Now, during the day session, I use the stop market order because the moment it triggers, I get the next available trade, which is generally during the very busy day session is only 1 tick one way or the other, and I know my order is going to get filled. There are rare circumstances when you put in a stop limit order that it may not get filled, and that's because there may not be a sufficient number of orders at that price, and the orders are put in by the computer first come, first served. So you could actually miss being triggered even if the trading price goes through your stop limit order. Sounds a little complicated, but you can look it up, and it's in the beginner playlist. There's 4 10-minute videos in each of the 2 playlists. You can see the link called Beginner's Playlist in the text below this video. Also, these terms about the types of stop limit orders and how margins work and how you use trade psychology and the candlesticks to set up a trade, and using the MACD trade signal indicator too. That's all covered in my book, and I'm very proud to say thousands of people have used my book. It's an organized, logical way to introduce you to the terms. You know, one of the most difficult things about learning to day trade stock equity index futures are all the new terms, especially if you come from stock trading only. The new terms, it's really important because it makes it easier and faster to learn, because I tell you in the book which are the important terms, which are the ones you absolutely have to remember, and we also go into some of the others also. But it really makes learning faster when you know the most important ones and the must-to-know from the nice-to-know category. If you want to see another video like the one today, hit the like button. That's how I tell how to make the videos that you want to see. And be sure and subscribe and hit that bell notification so you won't miss the featured trades that come by every week. I'm Don Singletary. I hope every day is a payday for you. And thank you.